Let's twist.
The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host for another day in the markets. And of course, if you were complaining about not getting some action, well, you got some today. We came out, kind of drifted a little bit lower and then had a massive spike down in the markets that kind of coincided with news that maybe Iran had taken one of our naval ships. And it basically came out that it was a U.S. ship. It wasn't one of our Navy ships. And maybe they were just looking to loot it or take it, or it's unclear. It's gone to the back of the news. So apparently it's not that exciting. But at least we had a nice little route down to 2094 on the S&P cash. We're at 2112 right now as we speak. 2.2 billion shares. Of course, all the volume in the morning. And we're back to this familiar pattern where everything above about 2108 in the S&P cash, the volume just goes quiet. 2.2 billion shares as we start the day off. And that's mostly in the morning. It's gone quiet. Now, you can probably say that we're going to kind of meander around these levels for a while. And I think you can make a good case that we probably don't go very far before the FOMC announcement tomorrow at 2. Of course, this is the last chance for these guys to give us the heads up. If they start waiting until September to raise rates, that means that they will be raising rates into the election season. I suspect that if anything that they don't want happening is a lot of election action, and they're going to try to get it done this year. That's at least my thought. So tomorrow is really the day that they have to do it. If they're going to pull the trigger, they're going to have to say something tomorrow about it for a June or even a September announcement, but they have to say it now. If they don't say it until late summer, that basically implies that they're one and done, and I don't think that they want to do that. Even if it's 0.1%, I think they want to get ahead of this, even if it's very, very small. They want to do it slowly. You don't want to do it fast. They've said that they want to start early and slow and then tailor it to the economy. Unfortunately, they've waited too long. We've got bubbles, toils, and trouble. Everywhere that we look, we see all kinds of trouble. Of course, interestingly enough, we've got all kinds of divergence. We had a very strong dollar, and of course, this morning it came in and broke through that 96.30 low that I've been talking about. I think everybody else has been too, kind of out of the blue. And I was very perplexed on why that happened, but talked to somebody that explained it to me a bit. That was that there are a lot of people selling out of Apple. A lot of those people are in foreign markets, especially in Asia. They were selling the market and then, of course, selling in dollars and buying back yen and yuan and all the other stuff that they have. We're off 83 cents on Apple. I'm going to get into it. It's made a major technical signal. We're waiting for the next bigger one. And on the back of them buying 140 or $200 billion worth of their own stock, kind of bizarre to see that this stock's down at all. If you would have believed everything that they were saying last night, I didn't. I posted in the den. There was something very bizarre about the way the numbers came in. I know exactly what the margins are for the S and the extra large version of the S, of the 6. So the question is just what was weird and why is it not up? And probably the bigger thing, my first blush was when this thing started moving was, they're going to take every one of these people that bought $500 million worth of weekly options and take them to the cleaners. These things are all going to end up being worthless by Friday. And that was my first comment. I think I posted that in the den. They're going to crush the premiums. And, of course, that's exactly what's happening. They took it down as low as 129.57. But we'll get into that a little bit longer and a little bit more. Other things of interest out here is probably everybody came back and started buying again. We're back into this familiar pattern where everybody wants to buy a dip and no one wants to buy the breakout. Again, we got up past that 2108 area, and the volume just really pulled back. And you can make an argument that that's for the FOMC. No one wanted to get too far ahead of themselves tomorrow. But, between the news and the dollar moving out here and why the dollar's moving and breaking previous lows, very interesting movement. I was thinking that if you wanted to be anything, it was probably bearish on the gold and gold miners. The dollar movement took care of that for me. And actually, it's not looking too bad. Dollar index at 96.10, and we continue to see a market. Other things. Got, I guess, a question or answer in the den, which we'll get to. But we're up 4 points after being down fairly strongly, and seems like everybody's willing to buy any kind of dip, not willing to buy any kind of breakout. And there's not a lot more to be said about that.
That it's all just a little bit of history repeating.
Would you believe that your stockbroker was Richard M. Nixon? Well, don't take investment advice from Tricky Dicky. This day in 1970, the stock market slumps, dropping 9.5% for the year to date. President Richard Nixon declares that if he had any cash to spare, he would be buying stocks right now. The Dow Jones Industrial Average finishes the day at 724.33. By the time Nixon resigns, August 9th, 1974, the Dow is at 777.30, a compound annual return of less than 2%. So he wasn't massively wrong, but at the same time, throwing money at the Dow probably wasn't the best advice from a president. But who can say? At least he went to China. That's what they'll always say. He went to China. But interesting nonetheless. Greece is still in the news, although it's kind of to the back burner now. I guess they're just going to ignore it until it bites them in the rear end. I don't see anything new in the news on this. I suspect that eventually they will have to come to the announcement that Greece is leaving the EU. Very interesting reading some German magazines yesterday, online anyway, and not a very popular thing to be throwing money at the Greece and in the Greece. But it's always one of those things where you just wonder, is it really worth it?
Are you suggesting we throw money at the problem?
Precisely.
And that's what they're saying. Let's just throw some money at this problem, and maybe it'll go away. My guess is they've thrown all the money in the world and aren't getting any kind of real movement from the Greeks. And now that it's boiled down to Merkel and the Prime Minister, Alexis Tsipras, it is going to look, at least to me, as, we're just waiting for that time bomb to tick off. But that will be it. Won't go away until Greece goes away. You know what? I think my next parody's got to be something about making Greece go away with Dawn dishwashing liquid or something, doesn't it? What else can you say? Not much happening out there, but my guess is that's going to blow up one day here soon. We're going to talk a little bit about Apple. I think I've got enough time. Yeah, 3.5 minutes in this segment. Firstly, from the numbers, we know the iPad looks more like a fad, at least for Apple. Sales of the tablets are falling extremely fast, faster than the the iPods after the iPhone came out. Apple doesn't have a product that will come anywhere close to replacing the sales and margin on it. The watch seems to be all but forgotten today as everybody discusses how many more iPhones that they will sell. And, is the question, is Apple just now a one-trick pony with nothing that could ever come back and make those kind of 60, 70% margins in hardware again? And the answer is probably could be. The iPad craze, I was actually at Best Buy a couple of times over the weekend. I was building a lot of new PCs. Had to run down there and get some new fans and some other things. Was looking at new touch screens and thought that it's it. Probably is the question, the iPad the big deal? I don't think so. I think actually everybody's figured out that that there used to be a thing, and a guy said, how's the best way to describe this? Said, you can absolutely tell the truth while you're lying. And I think everybody caught Apple in that telling the truth but lying at the same time thing. It's kind of like my mom. I used to tell her there's 97 bars in this town and I haven't been in one of them. Well, if I'd been in 96 of them, I would have been telling the truth. I hadn't been in one of them. So the question is, how far do you want to go parsing what Apple said during their meeting last night? And I think what everybody disliked was the fact that they kept on yelling and screaming about how many more iPhones they were selling in China without giving the actual volumes and how much faster everything was selling in China. But again, no real numbers out there. Anytime Apple releases a new product, they will yell and scream about how many they're selling. They wouldn't even mention how many that they built or how many they sold of the watches. If this is going to be a product, it certainly isn't going to be one of these products that just everybody buys instantly. One of the things my boss used to tell me was that if you can't explain it in one sentence, it is a problem. And if there is a better reason to say that the Apple Watch is not a failure, but as a lot of people saying, kind of at least this version may be the equivalent of other products that weren't right on the first get-go, it certainly looks like it could be that. Somebody in the den said probably the best description, lies of omission. And Mr. Spock said something like that about the truth. One of those nice Star Trek movies like that. When we come back, we're going to look at the technicals on Apple. In the meantime, you can give me a call, 877-927-6648, or email me at path@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we're watching the S&P kind of flop around here like a fish on the dock. 2111 on the S&P cash, up 2.5 points, 2.3 billion shares again. If we're going to break out here, I imagine we're going to see 4.5 billion shares now. We've built enough cause that we're going to have a huge volume one way or the other, up or down. That volume pretty much shuts off at 2108 on the S&P cash. Kind of gives you a little bit. We also have an incredibly bearish pattern setting up in Apple. Kind of weird to think that they've got all the cash in the world, and yet a chart can still make a bearish pattern. We got to a high of what in Apple? I did this chart that I've got up here now as one this morning where I was putting out a warning that if this thing actually traded anywhere less than 133.60, I think it opened up at 134 and some change or so. They watch out very, very carefully, because this is the first part of this asymmetrical triangle that has been out all over the markets in hundreds and hundreds of stocks, which is, if you're new to the show, it continues to be lower highs and higher lows, and you get into a very tight trading range. Then you break out. Now, if you don't break out of that with volume, let's say it's just average volume, then you want to be very careful. And rarely do you see it actually go back and break the the big high in these patterns when they do develop. In this case, it was the 133.60 high back at the end of February. But we broke that this morning. We closed back below it, which was the first problem, under 133.60. Now, we're basically in a pattern that basically now says something like 127 to probably 132, something like that, 132.50. And it doesn't have to move that far. But what you really want to watch for is the near future. And that is if this would start selling below about 127, which is the apex of this symbol, you really have to watch out. And it would be strange to think that they just don't step in and buy it. But 200 billion against a market cap of something like $1 trillion. So basically they could buy back one of every fifth share of stock and keep this up for a great while. We do need to remember exactly how the CEO is being paid, though. When he took over, there was a deal made, and that deal was if you hold this stock up over a certain price over the next 5 years, and I think we're 3 years into that now, then you will get $500 million. You're going to get about 10 million a year no matter what, maybe 10 or 15, depending on what we decide. But guess what? We're going to grant you on that 5th year $500 million. All you got to do is keep it above, at that time, it was $100. So, we're basically, $27 or $30? We're 30% higher than that number. So all they have to go back in and do is make sure that this thing stays above. I don't see any problem with him doing that. This one could sell off for years as long as they're always underneath a bid, unless everybody decides to sell at once. If they had a major deal, could you see 1/5 of the people selling their stock, in which case Apple would be out of cash and we'd be right back to where we were, which is market forces driving the price of Apple. Weirder things have happened in the market. I don't think the Apple sales are going to fall off a cliff, but we do continue to see things like the iPad face incredibly stiff competition. There are a lot of killer tablets out there that you can have in Android for $150 or less. There are a lot of other, even 10-inch ones that you can have for under $250. So probably about half the price of Apple product. Most people are not even choosing to do that if they buy the expensive iPhone. It is at the expense of buying yet an upgraded tablet. Of course, a lot of people also say, why do I need to upgrade my tablet? It's fine. It does everything I need to do. It's not like the smartphone where I'm really running out of capability. And I've got to buy the 128 gigabyte version just to even have anything available for room on my phone. Apple's done a good job of pushing people into those higher SKUs, but that's something else we'll talk about when we come back. Give me a call, 877-927-6648. Email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
There was some discussion about how you should treat information and news, and I thought I'd pass along probably the best discussion of this that I've ever seen. It comes from the CIA, and they basically had a gentleman work for years to write a book on how to really analyze information, especially when a lot of people are purposely trying to deceive you. And, you know, not multiple sources, everything else. But you can get the PDF. It's all over the internet. But it's called The Psychology of Intelligence Analysts. And it is, I have to say that before I read it, I tried very hard to stay away from news because I didn't know really how to vet it in the way that it needed to be vetted. But if you vet your news like everybody is a double agent talking to you, especially with a lot of the way that arguments are tilted to make you believe something that isn't true and just pure propaganda. An excellent book about clear thinking in a world where there isn't much to be had. But just a recommendation out there. But you can find it on the CIA website. And no, they're not going to come and club your house down if you go look for it. But I'm showing it here on TV. 3 Days of the Condor. You know, I watched that about a month ago, maybe 2 months ago, again for the first time. Oh, boy. Anyway, we were talking about Apple. So anything back below 127, 126 has to be incredibly worrisome for the market, and could, basically Apple is enough to break any one of the indexes that it's in to a great extent. Of course, basically it's 14.5% of the S&P cash. So, I mean, of the NASDAQ 100, excuse me. But it still would be enough to move the NASDAQ, which would move stocks lower, and there's enough tech stocks in the S&P. At least in some circles in finance, they call this iceberg risk. That is, you only see the 10% of the risk of a single stock like Apple. 90% of the risk in Apple is what it would do to the rest of the market if it could fail. And that's what always worries me. I don't see anything particularly. My guess is, though, that when we get into earnings in the next quarter, that we're probably lower than 127. It just looks like most of the people wanted to buy a new iPhone pretty much over. The run rate is declining, and that's one of the reasons why a lot of people are looking at Apple out here at 131.07 today, when they thought for sure that it would be printing, at least if they were buying these calls, they thought it was going to be printing 140 or 142. Not so much. Like I said, all those options are going to go to money heaven on Friday, I suspect. Don't look for a whole lot lower by Friday. But, basically 5 points up, 5 points down. We're 5 points down at 129 off of yesterday's pretty much closing price. So you have to kind of look at that. Anyway, we'll be back to that in a minute. Wanted to get into a lot of stocks when I could, or as fast as I could. Somebody asked a question up higher. Maybe I can get back to it. How does Facebook reacted after EPS is one of those questions in the den. What I do know is that their ad sales are down. A lot of people thought that they would make a lot more money on YouTube, on their YouTube-like videos than they have. And I suspect that off their earnings, a great deal of that is the people underwhelmed with how much money that they're making off these ads so far. With Google and YouTube, same thing. They continue to have an issue with how many ads they can put in when someone really wants to watch something else. And, Facebook has been going up against YouTube with a lot of video hits, but that hadn't turned into a lot of video profits. And that is, I think Facebook probably dead money for a little while. Also, the immense amount of people that they've hired. They came out with the numbers during the earnings of how many more people they've added. And this company is adding a ton of engineers. And in the short term, until those products come out, a big drain on it. And another reason why this thing is headed lower, I think this thing is probably headed in a trading range somewhere between this 84 level and probably $70 level, maybe for the rest of the year. I don't think it's going to get blown out, but at the same time, the trajectory where everybody thought this thing was going to just go to the moon is over, and it's mostly over because of the amount of engineers they've hired. And regardless of what Mr. Zuckerberg thinks, he's not able to bring in all the people from overseas that'll work for 10 cents an hour in his sweatshop, code shops. And also bring down the cost of engineers here in the United States, where there's still plenty of them. So kind of talking out both sides of his face. But all you had to do is watch the social network to know that he's probably a sociopath. And if you're running a business, maybe what you want. But at the same time, I don't believe him. And I don't think there's a lot of reasons to train a lot of very good people only for them to go back home after they're done with their indentured servitude to him. But I do digress. Movers out here today that we want to get into. Calmain Foods, activism, I guess, is what's on this. I couldn't find anything else. This thing has blown through the highs, but again, way through the highs and then is pulled back kind of in that trading range. So we want to watch how this closes throughout the rest of the day. Endurance International Group, EIGI, has had an incredibly bad hair day. Blew through the previous lows back to January 16th and February 2nd. If we go back even further on this thing, you know, it got a great deal of that back today, but still looks like it's gone down in those levels. And you're probably looking at your next possible point to buy this thing at about 15 bucks, going back into this sign of strength that basically it got into and then reversed out of today. But you get something this ugly, pretty much continues. Another one that's ugly is MDC Partners. MDCA is the symbol on this one. It basically all or nothing blew through the bottom out here with a volume and basically within a penny of the October 17, 2014 low. I don't know a great deal about this company. Let's take a look at the profile very quickly out here. And strategic marketing services segments, activation and consulting services, advertising and media. Boy, this one's one of these things. I hate these descriptions of companies where you read for 2 paragraphs and you still don't know what these guys do. There's several companies like this. They just irk me. Of course, one that is doing well today is Rent-A-Center. This one had a nice pop. You always have to watch when Aaron's Rents and Rent-A-Center are doing well, because that generally means that people are running out of cash to go buy something. And when you're talking about a television now that's $350 for a decent television, the question is, why would you buy it and rent it and pay $700 for the same TV? Maybe good if you're buying these things, buying the stock, but a company that is inverse of the economy most of the time. So you need to watch that one. But a nice bounce right back up to resistance level. Volume's not all that bad compared to the day that this thing got clubbed on 5 million shares. It's got 3.2 million shares today. It's probably going to take a while to get back up there, but very interesting to see that move. Another stock out here that got slammed pretty hard down to $16.38 this morning was the Container Store. I drove by them on Sunday twice, and it's very unclear why this company couldn't execute after the IPO that it had. Probably a little expensive to begin with, but even reading through what I have, it's still not clear what their problem is, other than they're just not making money, and everybody is buying the same containers at Walmart for a lot less. Maybe that's the answer. The only thing I could come up with. Anyway, up against its low, has not hit it yet, but you were looking at the October 9th low, $15.49 with 640,000 shares. Already had 2.6 million shares today. A little bit of pullback off those lows out here this morning, but still does not look good. Unipixel, I had a lot of people ask me about this stock in the past. I told them that basically they had one very interesting time in their life, and that was when the surfaces where a lot of these touch screens, and you touch them, they made the film or a process for making the film to actually go in the glass or on the glass and around the glass so that your finger could actually get capacitance and basically use all that stuff. Well, there was a place that had burned down, and there was a desperate need for Unipixel's fairly expensive technology during that. And then that's when this thing rocketed from $5 to $40. But just like the memory problem where that factory burnt down, eventually those factories get rebuilt, put together, and are building everything for a quarter of the price what they can be here. I think Unipixel's in Omaha. Not Omaha, it's in Oklahoma. I think it's somewhere in the Midwest out there. But their cost was like double everybody else. Now, they had some neat applications for their technology, but people didn't want that, or at least the manufacturers didn't want that so much, just as being able to get that capacitance touch screens. Now, they've been working on rolling out their own new technology But they kind of hit a big brick wall with that yesterday after the bell and announced it, and down to 357 today on some fairly decent monster volume, broke all the lows. The question is whether or not they're even an ongoing concern. And that's a technical and legal term that you need to be familiar with. If you see that, just know you need to really watch out. Do they have enough cash to actually get back on track and get their product out the door? And the question is, I don't know how they can. They're going up against people working for $1 an hour over in China and in Vietnam, and it is problematic at best to say whether or not this company can survive. But they had a nice run while it lasted, and that was all about scarcity that has gone away. Be very wary about any kind of stock that sells a commodity item that's in short supply that has finally come back in larger supply. And for me, there's no better examples of that than the DRAM companies way off their highs. And my guess is I continue to see DRAM prices continue to drop. So be very wary of those companies. I just don't see a great deal in them. What else do we have out here? Has the mailman paid you a visit? They reference back to 3 days of the Condor, but that's it. What else do we have out there? Windstream Holdings, and what is the deal on this one? Let's find out. I didn't have is a split, something else out here that I haven't seen. Headlines. It's reverse split, stock split, something split. So that one isn't all that big a deal. We looked at movers. Now let's go look and see what we got coming out after the bell tonight. Aflac after the bell tonight. Not giving us real indication anywhere on it. Akamai. Now this one pretty much has done everything it should from this move back on February 2nd. I would say somewhat limited. You could almost say that it's got a little bit of a reversal signal up here at the top. It would be very hard for me to see these guys come out with any kind of earnings that would blow out anything higher. I don't see a lot out there that says lower, but Akamai after the bell. If we want to talk about stocks that could really rip, this applied microcircuits, AMCC, certainly one of these. I've talked about these asymmetrical patterns, and this is exactly the kind of stock that's as dangerous as it gets in this market. AMCC, my guess is this thing can be 20% up or 20% down after earnings tonight. So keep an eye on this after the bell if you're doing any white lightning trading after the bell, AMCC. But when you get this total lack of volatility out here, always watch for it. I think it's got fairly decent short interest in it. So my guess would be a little bit down and maybe a buck up. Could really move out there. When we get back, we're going to get to Buffalo Wild Wings, Cirrus, GoPro, Panera, Western Digital, and U.S. Steel. We're bigger than U.S. Steel. Michael.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on the Psychology of Trading to begin your journey now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we're back here, we're looking at Buffalo Wild Wings. Just wondering how much all this chicken business and the chicken bird flu will impact Buffalo Wild Wings. Got to put the price of chicken up. There's the hormone issue. I eat a lot of chicken wings. In fact, I had chicken wings for lunch. Buffalo Wild Wings on Tuesdays and Thursdays have half price. And it's got to be, because I can go eat a steak dinner for what Buffalo Wild Wings charges for 12 wings and a little bit of ranch and some celery. So I won't go there other than Tuesdays and Thursdays. I skipped out to lunch over there today and ate. But it is, half of its bones. But, you know, it's just one of these things where it just doesn't seem to make a lot of sense to be paying, you know, a $15 tab when I can go up to Cody's Roast Hearth and get a small filet or a nice T-bone for about the same price. Just seems overpriced to me, let me put it that way. Of course, they've got a lot of televisions. Got a lot of televisions at Cody's Roadhouse, too. But I do digress. The only better thing now is that I found a little place up the street that has all-you-can-eat wings on Tuesdays for $8. I've been kind of going there, too. But what's going to happen to those folks? Anyway, March Madness is over. Earnings are going to be good. You know they're going to be going forward. This has to be kind of a cyclical stock, though. and that is that there isn't that big, real huge thing again for them. The Final Four is over. They got baseball and basketball, but that's not generally something that's huge. Here in Tampa, maybe we'll have a little something for the Lightning and their attempt at the Stanley Cup. But it's pretty much downhill between now and next fall and when football season rolls back up. And they're always light for the next 6 months. I would not be surprised to see them guide down at least a little bit on the price of chicken tonight. Long term, you'd like to see this thing at about 140 to buy it again. And that wouldn't be anything in the long term chart that would really even damage this thing. But I suspect that, could this thing drift all summer long back down to 140 on a weak stock market? I think the answer is yes. We've had pretty much, I think, everything you can get out of this thing, and they continually raise prices. Like I said, I can buy a steak dinner for what 12 wings cost me at Buffalo now, and that's on the days where it's half priced. So kind of tough for me to really get all high and mighty and excited about Buffalo Wild Wings. If you want to go watch a football game there, that's great. But again, we're probably, till they get busy again, probably September, I would think. Got a lot of other stocks out here. Do we have enough time? Cirrus Logic out here. Now, this one is up on volume right before earnings, going up against the March 16th high. So we're going to watch that. GoPro, if we're looking for a surprise out here, I would not be surprised if GoPro is the disaster after the earnings tonight. I just don't see that much business. Like I said, I was in Best Buy several times. Didn't see a lot of action or much action in the GoPro section most of the times I was in there. I did wander by. So maybe all the people that got GoPros for Christmas, that's it. Hard to say that it's total, but maybe they've hit the high water mark. I would think so. Panera Bread, another one that popped up on activist stuff. This one's probably ripe for disappointment. And then, of course, the activists will come right back in. We got Western Digital and we got U.S. Steel also. Hang on for Tom O'Brien. He'll talk us through those earnings and the last hour of the day. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.